So I recently asked a question. Do you think the market is going to crash this year? And the resounding answer from the little poll that I got was yes, it's going to crash this year. Interesting question. We'll discuss that. But we're also going to have a look at the update on the Vanguard. I do this every single week, and you'll see how well it's doing or how badly it's doing. Because the thing with being an investor is markets go up and down. Now, this is where that question comes from. Is the market going to crash? Well, there's a number of arguments as to yes, but equally there's a number of arguments that is no. So how do you decide these things? Well, you can kind of look at the geopolitics around the world. We've got the oil prices spiking left, right and centre. Thank you very much. Need the coffee. Yes, we've got the oil prices spiking left, right and centre. This has a massive effect on cost of living. You tie that into interest rates. Interest rates are medium to high, but we've still got inflation creeping in. And this all puts pressure onto the cost of living, which means people aren't spending, limited growth, etc., yada, yada, yada. Now, what does this mean in real terms to the man in the street? Well, it just means that the loaf of bread costs a little bit more. So what they do is they cut back. Now, from the bigger picture, as an investor, does it matter? No, I don't think it does. You see, the moment that we're in at this moment in time is ideal for a trader, somebody that's on short-term spikes. You know, there's a lot of volatility in the markets at the moment. And you have very big, deep pullbacks and then push forwards. Now, to the investor world, that's smoothed out by using a DCA process. So when it pulls back, you're not selling, whereas a trader would. You are thinking, brilliant, I'm getting more bang for my buck. So you're getting a better price. So when I say, does it affect the price of bread? To the investor, no, it doesn't. It's actually a good thing. Now, the markets will always shrink and they will expand. You can go through history and you will see the Great Depression, crash of 29, 2008 financial crisis. There was an energy crisis in 2015, and then we had COVID in 2019. There is always something that's going to affect the markets. Now, when the Ukrainian war started, everything went a bit mental then as well. But there's always a war. There's always political upheaval. So when you're talking about, is it going to happen? It could happen anytime. So really, what you should be doing is not trying to predict when it's going to happen, is just react to it. Now, if I was, thank you very much. I know Scruffy likes it coffee. If I was day trading and one thing and another, I need to be glued to the screen and I need to understand what's going on day by day. And I can take a reaction or a prediction based on the information I'm seeing. But if I'm trying to predict something that could be in the next 4 or 5 months, anything could happen. So don't try and predict it. Just react to it. And if you're a long-term investor, for me, which you're about to see, is if it falls, so what? So what? There was a thing when Trump was pulling his tariffs and I held my account. It dipped back quite considerably, but I continued to buy into it and it catapulted forward. Now, because I'm not looking to sort of really start drawing on this fund for another 4 years, I'm quite happy to ride the noise out. Now, in 4 years' time, if we're in a situation like it is today, and it's riding high, I'd be looking to move over maybe into safer bonds, just simply because I'll be moving into retirement and I won't have the time to balance it out. But if you're a young person or you've got a 10-year horizon or something, do you really think you know what the market is going to do in 10 years? Because I don't. So what you have to assume is the markets will constantly rise, because that's how index funds are put into place. They are designed to constantly rise because it's always the best companies. And if that's the case, just keep getting it at a better price. Something for you to think about. Anyway, drop that sort of stuff down in the comments. Let's have a quick look, see what's going on. Well, a week ago, on the 24th, we ended on 190,737, and it had grown by 2,583, or 1.4 when we checked it. We're now going to update it and see where we are. I've put a little bit of money into this today, as you can see, and it's the 1st of May, so we're now chotting up what's going to happen across this month. But for the whole of April, I managed to get personally into it 4,700. Now, that was money that I've put in from my other ventures and one thing and another. So, flick this over. This is the state of the fund as it is now. So, let's have a quick look. So, the pension is 117,725.14. We have the ISA sitting at 55,450.86. We have the quick fund at 19,662. I'll touch on something about that as well. And then we've got the treat fund, which has bumped up to 408.88. Right, okay, wow. That has jumped up significantly. Now, what that's doing is it's natural growth, but these two, this I'm just leaving to run on its own, not adding anything into it till I've filled up the ISA, because the ISA is tax-free, so I can put £20,000 in there before, well, it's capped at £20,000. And it'll all be tax-free. Likewise with the pension, I put a lump into that as well, because there's a tax incentive for the pension side. Now with that, I won't pay any tax till it's time to withdraw it. And these two are taxable, but that I've already got a lump of money in, and I'll start feeding into it once I've done the 20,000 on the ISA. But this one I set up just to show you how little and often can work. If you go through the other videos, you'll see how I found the pot for it. Put £25 a month into it as a direct debit, and it's just growing steadily. Now, it's made a personal return of 8.68. That is fabulous. There isn't a bank in the land would give you that. So I'm quite happy with that. So what else can we look at when we're looking at these? Well, we can look at the investments of the portfolio, which is here. Now, I keep it relatively simple. The reason why I have the North American All Cap, which is the V3, and also the ESG Global All Cap, is simply to do with cost. They are very cheap, and it can only really rise. Now, the North American one, obviously America's got a very good holding, and it came out as one of the top performers over the last 5 years. Now, likewise with the Global All Cap, which is V3, it's cheap, but it's got a lot of emerging markets and ethical markets in it. So again, it can be a little bit out of the commercial noise. And then I have my singular market, which is the FTSE Global All Cap. That is everything, across the board. But it's a little bit too expensive for the smaller pots. So that's why that's there. Okay. Now, from a performance point of view, if we look at it over the last year, well, over the last year, I've managed to get £52,000 of money into this. And the investments themselves have returned 34,255. So I'm more than happy with what's going on with this. And it's all done through the same way. I drip feed into it all the time. You know, and you can kind of see that in the transactions. Drip feed. That there, I wouldn't worry too much about that. I just transferred from the V3 into the all cap. Just there was a lump of money and I just moved it over into there. So that's what that is. So it's not actually a realized loss. It's just had to sell it out of that fund to buy it into that fund. Okay, so that's what that is. And then you go down and I just drip feed in all the time. Make a bit of money, put it in there. Again, that's what I was doing there. I took it out the V3 and put it into the NB. Okay, so that's what that is. And you just drip along. Tick, tick, tick. So what did it grow? Or how much has it grown? Well, there you are. So in the last week, this has grown by 1.3%. And its change is 2,509.78p. I'm more than happy with that. So I can live with that. So what I'll do now is I'll just make a note of what it was at the last time. So that's 2,009. So in the last couple of weeks, it's over $5,000. Oh, I didn't do that. 2,509.78. That's it. That's better. Sorted. Okay. So that's it. So you can see where we are. Fund started January 22. And there are the pots. Scruff's a happy boy. We'll reset the balance so we can see what's going on. So it's 193,247.38. And today is the 1st of the 5th. So the next time we do a check, we'll see how well it's done. But at the moment, it's doing spectacularly well. So if you're interested in all of this sort of thing, do subscribe to the channel. Hit the thumbs up. Drop it in your comments. I answer every single one of them. And hopefully we'll get this to a tidy sum over the course of the next year or so. So as always, guys, trade well. Keep your risk managed. But above all, do what you love. And the money will follow. See you all in the next one.